Hey, this is Peter from Money and Investing. Welcome. The world is primed for great innovation and disruption, and Tesla is at the forefront of this. In this video, I'm going to tell you why my 100,000 plus stock portfolio is 95% Tesla and growing at age 24, and why Tesla is one of the biggest value creations the world has seen. Massive potential growth. The EV market is only 2.2% of global market sales today. And according to Statista, EV shares of the entire market will grow 22% compounded annually. By 2035, EV sales will overtake ICE vehicles and continue to grow as ICE vehicles continue to diminish in their market share. Almost 50% of all vehicles in Norway are EV. Tesla is projected to increase production from 240,000 to 3 million in 2023, an increase of 11,050%. Tesla will only increase their huge market share of 17% due to pan-19. Battery technology. Tesla is introducing new battery technology that will bring down costs in line with gasoline vehicles and allow EV batteries to have a second and third life in the electric power grid. Tesla is introducing a low-cost million-mile battery, which is a game changer. Innovations such as low cobalt and cobalt-free battery chemistries are leading to the ability to store more energy for longer periods. Tesla also plans to implement new high-speed, heavily automated battery manufacturing processes designed to reduce labor costs and increase production in massive Terafactories, about 30 times the size of the company's sprawling Nevada Gigafactory. Tesla is working on recycling and recovery of such expensive metals as nickel, cobalt, and lithium through its Redwood Materials affiliate, as well as new second life applications of electric vehicle batteries and grid storage systems. Tesla developed a simpler and less expensive way of packaging battery cells called cell to pack that eliminates the middle step of bundling the cells. Tesla is expected to use the technology to help reduce battery weight and cost, which is a game changer, as batteries are the most expensive component in a Tesla. Acquisitions of Maxwell and Hybar and work with Jeffrey Don will have Tesla making their own battery cells and be even more vertically integrated. This is the most important part because they will be able to create everything in a vertically integrated environment. Maxwell and Tesla have created a dry electrode technology, which drastically brings down the cost and time to make batteries. The new technology cuts out the degrading process of battery recharge. Jeffrey Don created new technology that doesn't damage the battery when charging fully. So now we're able to utilize full battery charge without degradation. This is very important. Tesla will be worth an additional $36,000 due to mobile storage batteries. You can sell energy at peak times and buy energy at low prices. This is game changing. Ability to recycle batteries at much cheaper costs rather than mining for more materials. Every car will be added to an exponentially growing network of mobile batteries that makes money from selling battery storage to utilities and selling power to customers. This is market changing. Ability to have 5 to 7 power walls right in your Tesla to power your house. Ability to store energy and buy cheap and sell high. Battery cost is 4 years ahead of other automakers in terms of cost declines. This will continue to be market changing. Leader in autonomy. Tesla has collected nearly 9 billion miles of data, where Waymo, who was thought as second in the race to full autonomy, has only 10 million miles of data. Tesla decided to create their own AI chip because NVIDIA couldn't match their needs. When outside engineers stripped down Tesla's new chip, they discovered that Tesla is half a decade ahead of everyone else in their technology. Engineers from Toyota said, "We cannot do it." Tesla has a fleet of over 1 million plus cars collecting data and have over 3 billion miles of data collected compared to 20 million for the second leading Waymo. Tesla uses vision-based software and uses neural network AI to build an autonomy brain, solving millions of specific problems. Waymo, who uses LiDAR, needs to map out every path and relies on lasers to gauge the distance from an object. LiDAR is also extremely expensive and is almost financially impossible to scale. LiDAR is not able to solve certain problems and only works in ideal environments. Robo-taxi network. The cost is 1/10 of a traditional taxi. Teslas will have more than 50% cut of gross revenues from autonomous taxi networks. Uber and Lyft currently take 20 to 30%. While working, your Tesla will be able to drive itself around and become a taxi, adding a value of 10 to 30,000 a year per vehicle. This will disrupt the transportation industry. Vehicle to grid technology. Tesla has all pieces together to be a power utility. AutoBidder allows for a virtual power plant, and virtual power plants allow for a renewable grid. The million-mile battery breakthrough allows for vehicle-to-grid. Instead of having Tesla sit for 95% of the time and get paid for it sitting there to connect to the grid. Competition is over if this happens. There will be too much incentive to buy a Tesla than consider an Audi e-tron. Ahead of all competition by half a decade or more. You can look at the battery production efficiency, autonomous hardware. Tesla is also solely focused on EV and doesn't have the dilemma of balancing the transition to EV, which is proving to be more difficult than thought for traditional vehicle makers. They are only extending their lead with Pan 19 as traditional makers delay. As vehicle sales plummet worldwide, other car makers will have to trim their budgets, such as money allocated to automated vehicles and R&D. There's already a huge barrier to entry in EV market. Tesla is vertically integrated and becoming even more vertically integrated with batteries. Declining cost curves. According to Wright's law, gross margins will reach 40% in 2024 and likely increase due to never-seen-before breakthroughs in battery technology. Tesla is able to build factories for $11,000 per unit volume of capacity, and probably actually lower since Shanghai is going to be able to produce 200,000 vehicles compared to 150,000, which was normally modeled. Upcoming S&P inclusion. All index funds will have to carry Tesla. There are only 44 million shares available for retail investors, for 50 million US retail investors now. This will drastically increase the price of Tesla's stock. If Tesla issues more stock and uses this to build more Terafactories, that will in turn drastically raise the price. Dilution of shares is negligible. This is Peter from Money Investing. Thank you so much, guys, for watching my first video. Let me know your comments and what you think below. To those who are still watching, you're amazing. If you like this content and would like more investing videos, please consider supporting me at patreon.com/money_investing so I can get better content out there for everyone. Thank you all.